What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we saw the tech sector leading the way with most of the indices in the red and the tech sector pulling out a green day. We also saw the VIX finally closing below that critical $20 support level. So first up, let's take a look at the Nasdaq 100 QQQ's ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw the QQQs going up over 0.5% today. And the interesting part about that is the technology sector was the only sector in the green today. We're finally seeing money rotating out of other sectors and coming back into the technology sector, which is causing the Nasdaq 100 to show continued signs of strength. We see the second day in a row that we closed back above the 20 simple moving average, and we did have a very bullish gap up open, and we did run all the way up to that resistance level at 324, which is the previous daily higher high that we're trying to break out of. Now remember that gaps typically get filled, so when we did get that gap and run, I did call it out in the Stocks channel Discord that we were likely going to retrace and close that gap at 319. So it's very helpful to follow gaps because when you see a gap up like that and you see the market start running away from you, it allows you to remain calm and not get that fear of missing out, knowing that the market is likely going to pull back and close that gap. So if you were really wanting into the QQQs over 320 and you saw that gap and run, if you're on the Discord, you knew to stay calm and just wait for that gap to close. And if you were patient, you got a much better entry at 319. Now that doesn't mean we can't go lower than 319, but it would have saved you from a bad trade today, or it would have allowed you to make sure that you don't FOMO in at higher prices. Now remember, after an ABC correction, it is possible that we go back into the general trend of the market, which is still a bull trend. In the medium and long term on the QQQs, if you follow my weekend analysis, we still do have a bull trend on the weekly and monthly charts. So it is still possible after this ABC correction that we're going back into a 5-wave structure to the upside. This is just drawn for reference only, but it will look something like a 5-wave structure to brand new all-time highs. So that means that if we're finishing out wave 1, we still would expect to see a pullback before we go any higher, and what better time to pull back than on a day that we got rejected from that 324 level. So don't get FOMO just yet, because this wave 2 could come back down to 318, could come down to 314, and possibly even 311 or lower before we start into this wave 3. So just be patient and let this price action show us where this wave 2 is going to end. In a bullish scenario, we would only pull back to about the 20 simple moving average, which favors the 318 support level. And in a more moderate market, we would probably come down to about 314. If we see volatility this week with the Fed speech or quad witching, which a lot of you keep asking me about, it is possible we see more volatility and we come down to about 311 or lower. So don't try to guess, just let the price action tell us where we're going to find support. Currently, we continue to go higher, which we know is not sustainable, and eventually we will need to see some cooling off and we will need to see some selling before we can go back into that wave 3. So right now I am favoring the bullish scenario because we always go to the higher degree trend, and from Sunday's video, you should already know that that trend is bullish. The weekly chart and the monthly chart tell us to still expect a bull market until we see something shift. So on the daily chart, closing back above the 20 simple moving average, and all of the other moving averages for that matter, is bullish price action. The trend is developing bullish because the 5 EMA is starting to cross back above, and pretty soon here, the 5 EMA will be back above all of the other moving averages. So the bulls are doing everything they need to do to get this market back in trend mode, and once the market is officially in trend mode and we get this pullback for wave 2, that would be the best time to go long in this market and getting ready to reap the rewards of this wave 3 coming. Now remember, this doesn't have to happen the way I shown it here, so remember this is just reference only for what a bull market would look like. To validate this bull market, we would still want to get a daily price action close back over to a daily higher high, which is still meaning we need to see a close over 324. I doubt the market's going to make it that easy on us, so I don't expect to see the QQQs closing over 324 quite yet. I'm still expecting to see a volatile pullback in wave 2, which is going to try to fake out the bulls before we go back into that bullish rally. So be patient and remain disciplined and continue to watch the price action. Don't forget, on the Stocks channel Discord, I'm doing intraday updates every single hour, which helps you make sure you're staying on the right side of the trade. If I see something shifting intraday, you'll know about it, and every single hour you will get an update and you'll know that you're staying on the right side of this market. So right now on the QQQs, just know that we're at a very important pivot moment. And even if we see selling from these prices, that doesn't necessarily mean bearish price action. We had a very nice impulsive move off the lows, and we're up over 6% from the close on March 8th. So the price action is looking good and the trend is developing bullish, so continue to watch these critical support levels. The support levels I want you to pay attention to are right around 319, 318, 314, and 311. Remember, if we start breaking down below 311, that's going to increase the probabilities of bearish scenarios. So that's going to be the most critical support level right now. And don't forget, it's possible we come all the way down to these levels before we continue to go higher. Now to the upside resistance, continue to watch that 324 breakout because that will be a daily higher high. If we can break out over 324, it should be a quick trip to 327 because there's not much resistance on the way to that level. That will be a gap resistance level, and if we can break over 327, it's likely we will close the gap at 330. So I'm not expecting to see us just run up and close that gap without any volatility or any pulling back. So don't expect to see us blasting through 324 without some kind of pullback before we get to those levels. On the S&P 500 SPY ETF, we went down about 0.13%. We still have support at 394, and we're sort of just messing around up here where there's no resistance at brand new all-time highs. We did see a cool off today, but intraday we were trading very near 398. Don't forget the price target on SPY is up here at 404, and it looks like we're well on our way towards hiking up to that level. Just like I said with the triple Qs, it's possible we see a pullback, and don't forget we could come all the way down to the 20 simple moving average around 388. We're in a bull trend with bullish price action, so we are expecting to see the price continue to head higher. That doesn't mean we won't see selling, so watch support at 394 and down here at 390. As far as resistance levels go to the upside, it's possible 397 is now resistance since we did have trouble breaking through that level with the intraday price action. Next up is the Dow Jones ETF, and we saw the Dow Jones going down 0.37% today. We were getting a little too far extended over the upper Bollinger Band, so it's really not that surprising to see a little bit of cooling off. We're going to have support right around the previous price target at 327. And if we break below that, there could be support at 322 and 320. You could see the trend is still very strongly bullish and the price action is well above the positive sloping 5 EMA. The price target above on the Dow Jones, as long as we remain in this bullish trend, is going to remain up here at 336. On the Russell 2000, we saw the most selling of all, going down 1.67%. We found support right on top of the 5 EMA right around 230, and we do have support levels below at 227 and the 20 simple moving average at 224. We're going to have to break back through that 233 price target and the previous all-time high at 234 to get up to our next price target at 240. So if you watch my weekend analysis, the Russell 2000 is getting very far extended on a monthly chart, so it's not surprising to see the Russell getting sold off the most today. Don't get too bullish on the Russell at these levels because it is likely to be the next sector rotation. I wouldn't be surprised to see the Nasdaq 100 outperforming the Russell, and I wouldn't be surprised to see the Russell going lower as the Nasdaq 100 is going higher. On the ARKK ETF, we went down over 2.20% today, and we closed right on top of the 5 EMA right around 126. We still have support at 125, and if we break below there, you're looking for support around 117. Upside resistance is still going to be the 50 EMA, which is now around 132. Above the 50 EMA, we're going to start looking bullish again, but we're going to have resistance right away at 135. Don't forget the ARKK ETF is still in a bear trend, and the price action is still trading below a negative sloping 50 EMA, as well as a negative sloping 20 simple moving average. So I'm not bullish on ARKK until we can get back over that 132 price target. Next up is the VIX, which is the fear indicator, and we saw a very important thing happening on the VIX today because we closed below support at 20. This is the first time we've closed below 20 on the VIX, going all the way back to the March crash of 2020. So we have a gap to fill at 18, and there will be a lot of institutional money coming into this market if we do see the VIX getting down to those levels around 18. So this is a very important thing to pay attention to because in a low fear environment, the market is likely to go to new all-time highs. Now this could be a fake out, so we need to see a confirmation close below 20 yet again tomorrow, but this is a bullish indication, and in the long term, it favors a bull market. On gold, we're still slowly drifting up towards the price target at 1761. On silver, we got rejected at the 50 EMA right around 26.25, and it looks like we're slowly still trying to make our way up to the price target at 26.50. On Bitcoin, we're currently up about 1.5% after this little bit of a sell-off here, and we did get very close to that price target before we started to see some volatility. So whether or not we get back up to that price target is to be determined, but don't forget that Bitcoin is very far extended, and it wouldn't be surprising to see it go into a correction any given day. So don't get too bullish on Bitcoin at these levels, but don't forget it still is in a bull trend, and we still do have bullish price action. So right now on Bitcoin, you're looking for a break back above 58,000, and that could bring us back up to our price target at 62,500. If we start breaking down below the 20 simple moving average around 52,000, that will increase the bearish probabilities that we're going much lower. On Amazon, we inched up about 0.33% today, but we're still closing below a negative sloping 50 EMA and 20 simple moving average. Watch for support at 3090 and 3033, and we're going to run into resistance around 3160 and 3200. On Tesla, we went down a whopping 4.39% today, and we're back to closing below all of the moving averages. Remember on Tesla, we need to get back above the 50 EMA to get bullish, which is now at $715. The price action is below all the moving averages and they're all negatively sloping, which means we're still on a bear trend and the price action is also still bearish. So don't get bullish on Tesla too soon and wait for that confirmation. It's going to save you a lot of money in the long term rather than guessing to wait for the price action and wait for the trend to confirm a bull market. Right now, you're better off being a Tesla bear until we close back above that 50 EMA. Watch support levels below at 618, and if we break back below that, we're looking for 550. On Apple stock, we went up 1.27% today, and we did find resistance at the 50 EMA and that resistance level I told you about last night, right at 127. We got up to that level perfectly before we saw selling coming back into the market, and we did close below the 50 EMA yet again. The good news is we did close over the 20 simple moving average, so we are starting to see some bullish price action slowly but surely. We still need to get above 127 to get too bullish on Apple, but it is a good step in the right direction. We're slowly starting to see the bullish trend picking up momentum, but we still are in a bear trend in the medium term. Look for support levels at 123 and 120 and resistance above at 127 and 130. On the financial sector, we saw selling today going down over 1% and we're still on a bull trend. The price action is still holding up above the previous price target, so it doesn't look like we need to get bullish on the financial sector just yet because it's still looking bullish. On the industrials, we sold off about 1.42% and the price action closed right on top of the 5 EMA. That's still bullish price action and this is still a bullish trend, and we really just see the industrials cooling off a little bit before possibly heading even higher. On the energy sector, we dropped a whopping 2.85%, and it's possible that we finally saw the top on the energy sector and it's time for it to cool off. We're still holding up in a bull trend and we're still holding up above a positive sloping 20 simple moving average, so we don't want to get bearish, but it is starting to look like it's rolling over and possibly ending its bull rally. On the healthcare sector, we were pretty flat today, basically going nowhere, and we're still holding up above a positive sloping 5 EMA. The bullish trending is coming back and we're back above all of the moving averages, so it does look like healthcare could be going back into a bull run. So going back to the S&P 500, it does look like some of the sectors that were outperforming tech and healthcare are starting to see selling as we start to see strength coming back to healthcare and the tech sector. Don't forget that money always rotates around in the market and you never want to get too euphoric on any one sector, and you want to be ready to switch positions at any given moment. So right now it looks like money is going back into the tech sector, and we're definitely seeing a lot of selling in financials, industrials, and energy today. That doesn't mean those sectors are over with and they're out of their bull rallies, but it is a sign that we're starting to see rotation coming back into the tech sector, which overall is bullish for the stock market. So I'm still bullish on the tech sector right now, but we still need to get that confirmation close on the triple Qs back above 324. So expect to see volatility in the short term. Even though the VIX is heading lower, it is likely we see some selling going into this week to finish out that wave 2 before we go into wave 3. So be patient and be disciplined and continue to watch the price action at these critical levels that I'm giving you. Don't forget I'm giving intraday updates on the Stocks Channel Discord, which will really help keep you on the right side of the trade. If you're interested in checking out our trading community, you can find out how to join the Discord server by clicking on the link in the description of the video. So next up, let's take a quick look at some of our trade ideas, and first up is Palantir. We saw Palantir going down over 4.4% today, and we closed right on top of the 20 simple moving average. On a 1 hour chart, you can still see that we're forming higher highs and higher lows, but we really want to see Palantir stay above this 25.40 level. If we start breaking down below $25, Palantir will be looking less and less bullish, and it's not likely going to get to our price target around $29. But as long as Palantir can hold up on the support level and break this $27 resistance level, we should see $29 in a flash. So going back to the daily chart, we're looking for Palantir to try to bounce off support and get up here to this price target at $29. If it breaks below $25, it's likely time to cut our losses and move on. On Shopify, we went down 1.37% today, and we closed right on top of the 5 EMA. We still have support levels at 1135 and 1111, and our price target is just above at 1200. If we can break above 1200 and the 50 EMA, we're likely going to get to the next price target in a hurry at 1260. And then finally, we have Lockheed Martin, which did hit that price target at 348 today. Remember, if we can break and close over 348, we do have one more price target above at 357. Support levels are still 344, the 50 EMA at 342, and our previous support level at 340. So if you want more Stocks Channel trade ideas, there's plenty more every single week on the Stocks Channel Discord, and you can find out how to join the Discord server by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.